Dipan Mehta, good morning. How are you feeling? Markets, do you think this susti will continue? That's the right word. I was looking for actually a right word. I'm used to, it's, if I say range bound, if I say not going anywhere, we've been using this word. So I thought I'll use a Hindi word today. Market में सुस्ती कब तक चलेगी?
Yeah, good morning, Nikunj, and thank you very much for having me on your show. ये तो कहना बहुत मुश्किल है कि सुस्ती कब तक चलेगी, but all we can say is that there are worse challenges than we thought earlier, and the big problem really is with the inflation and interest rates. And what we are seeing just now is a compression of the price to earnings multiple. And how long that plays out and how deep that can go is very difficult to estimate, because price to earnings multiple in itself, although a quantitative number, has many qualitative variables behind it. So very difficult to say which way the market trend will go ahead. But all we can say is that the fundamentals are still intact. Look at the GST numbers, the auto sales numbers, all the momentum indicators are still positive, and many sectors are in what I would call a multi-year bull situation, or a positive trend, and that I think should help earnings going forward. So we just need to ride out these tough times and wait for interest rates to settle down and then perhaps start declining. And that's where the trigger will come, and you will see inflection point and the market turn around from the sideways or to slightly bearish phase to a more bullish phase.
Dipan, economists are talking about slowdown now. Markets have been in a sideways mode for last 18 months. Markets have this unique ability of catching what is coming next. So can I say that it could be a classic buy the rumor and sell on news kind of a theorem again, which is that markets have already priced in or baked in a lot of slowdown, which the economy now seems to be reporting?
Yeah, in a way, these two correlations are a bit difficult to really get a handle on. And as I said, I think the bigger issue is not the slowdown from the Indian stocks perspective as much it is the interest rates. And interest rates are very closely linked to price to earnings multiple. I think if you look at last 3-4 quarters or so, earnings have more or less been in line. Analyst estimates also have not been cut. In fact, many instances they have gone up, but yet stock prices have gone nowhere or have declined. So what we are seeing is that the price to earnings multiple is where the hit is coming maximum, and the whole situation was in reverse mode 2-3 years ago, where earnings were going nowhere but stock prices were moving up, and that was a period when the interest rates were very low. So I would just like to focus on this interest rates, global interest rates, local interest rates, before I can say with conviction that the market has bottomed out and we can see a rally from there on.
Okay, now here's the push-up challenge with the founder of Zomato, where ET Now challenged Dipinder Goyal to a push-up challenge. Let's remind our viewers about, we'll revisit this push-up challenge and then I'll come to Dipan Mehta after this. There you go, let's see it again.
जोर लगा के हलिया जितनी उम्र उतनी पुशअप बैच 1 views
Anisha, who won?
performance.
We're Team ET
Team ET
now.
now,
Nikunj.
exactly.
Team Zomato is insisting that my form was off. My hands were
was
slightly
so
wide.
Yeah,
Wide
so
for-
losers.
Exactly. You got to call some of our old friends there now and tell them.
There seems to have shifted the team, but we'll remind them where the loyalties lie.
Dipan Mehta, I know you're into marathons.
I don't think
so
you want to compete with Dipan Mehta.
That's what I'm saying. So there's a push-up challenge which we did. Now it's the next one coming your way, which is a marathon. By the way, what was your number this year? Half marathon.
2 hours 28. 2
Oh
hours
dear.
28.
I'll have to train for 3 years to beat you, Dipan. I take my challenge back.
But you are in very good shape. And Nikunj, what comes to mind is that Dipinder also is in very good shape. And if your CEO is in good physical shape, it's not too long before the company also starts to reflect that kind of health on the financial front. And I'm very positive on Zomato. I think they are pushing the right buttons over there, and they are getting their strategy right. And at some point of time, whenever there is complete visibility of earnings, you will see a big re-rating in the stock.
Dipan, what got at least our attention, when I say our attention, ET Now's attention, was when you spoke about a plan in place to have $1 billion profit by 2030, 2031 for a company which is struggling right now. I mean, struggle is not the word, for a company which right now has adjusted loss. I'm using the word adjusted profit and a net loss. If they have a path to profitability where they're thinking about $1 billion, I wonder what will happen to the stock then.
Yeah, absolutely, absolutely. See, the thing is that these are companies, I've always told you, Nikunj, if you want to buy a 10-year stock, which I had bought, say, 10 years ago, the stocks I look at which gave maximum earnings were the ones which had a sustainable business model and a large footprint. And Zomato, I think, certainly checks those boxes because in 2030 also we will still order food. I think it's not going to get downloaded on any app or something, and food delivery will still remain very much relevant. And by then they would have built even more moats around their business. And this duopoly which is there in Swiggy and Zomato, that will remain even in 2030, I think. And if they keep on doubling their business every 3 years, then in 8 years time they would be three times their size, and at that point of time it can be extremely profitable because the costs will not go up at the same rate as the profits, as the revenues. So I think that the potential is there for the company, but they do not have to make mistakes, I think, or at least they have to manage their capital better. Because I'm not that optimistic on this Blinkit acquisition. I think maybe it's a bit too much for them to chew.
Let's see how the Blinkit acquisition pans out. That does remain a concern for a lot of sell-side analysts as well. But yeah, capital allocation is one thing that we'll watch out for Zomato. But I wanted to shift gears, Dipan, and talk about the defense sector. Hindustan Aeronautics, for instance, will be in focus today because there is an order win of around 7,000 crores. There is also talk about how the company might get included in MSCI come May. And of course, dividend play is something that continues to be the case for a lot of these defense names. Would you still be a buyer as far as HAL, BL, etc. is concerned?
Yeah, absolutely. I think these companies are on a roll, and recent interaction with the ex-army general suggested to me that they are going very, very strong on indigenization and procurement of all capital assets as far as the army and navy, air force is concerned, from as much as possible from Indian companies. So it's a huge opportunity opening up. It's a multi-year opportunity, and this order flow is going to keep on increasing for Indian domestic defense companies. There's a great export opportunity as well, where they haven't even scratched the surface now that technology and products are at international level. So you may have a soft quarter or two because end of the day, these are businesses which are like in the sense of a project, in the sense that when they deliver a large equipment, those quarters are good, but there are some quarters where the work, the kind of progress made on specific projects may not be as high. So if you're able to live through some amount of volatility in their earnings, I think on a 3 to 5 year basis, these companies can deliver very good returns.
Well, yes, so near-term choppiness is possible because of the quarterly earnings moves, but definitely a long-term story. In fact, let's go across to Somit to understand the recent news flow regarding Hindustan Aeronautics, the order win, plus the MSCI inclusion probability.
Well, if you see the Cabinet Committee of Security, that is CCS, has cleared the procurement of 70 basic trainer aircraft worth nearly 6,800 crore rupees from HAL. Now, of the 70, 40 are expected to be delivered over the next 6 years. And the company had earlier indicated in the third quarter FY23 conference call that they are expecting around 55,000 crore rupees of fresh order over the next 6 to 12 months. And this order or this deal is expected to be a part of the order that they're expecting of around 55,000 crore rupees. Now, other orders that are in pipeline includes a light utility helicopter, a repeat order of light combat helicopter, and the Sukhoi upgrade. Now, this order win will help the company maintain its double-digit revenue growth from FY25 onwards also. Now, this order may positively impact the company's revenue and earnings estimate for FY25 by around 3%, and this is as per Novama Broking. And they're saying that it won't impact the FY23 and FY24 estimates because the deliveries are expected to start from FY25 till FY30. Now, post this order win, the total order booking expected to be around 90,000 crore rupees for the company, and this is after adjusting for the fourth quarter FY23 revenues. Now, apart from this, brokerages are also indicating that Hindustan Aeronautics as a stock could get included in the next MSCI review, that is in May 2023, and they're saying that the stock will most likely get included if the share prices continue to stay above the 2,650 rupees per share mark, and they're saying that if the stock is included, there could be inflows to the tune of close to 140 million US dollars, that is nearly 4.6 million shares for Hindustan Aeronautics. Apart from this, the company will also be considering its second interim dividend on March 10th, and given the strong cash flows, brokerages are expecting a good dividend announcement coming in from HL, so keep an eye out for this stock.
Thanks, Amit, for giving us all of those details on HAL. Let's shift gears then. Stocks on the editor's radar, and we've got two candidates that we're discussing today. Let's first start off with Axis Bank. I got the official SMS as well for the transfer of business now with the Citi acquisition.
You have a Citi credit card.
Yes. And, just going by what brokerages are saying, there is, of course, that goodwill write-off that we know about. And then ROE is only going to be realized by FY26. Let's just understand your take, Nikunj.
Avan, the acquisition, because the Citibank credit card business after the takeover has contracted, maybe they've lost market share, or everybody's or the customers are going to some other brand, we don't know, but the size of the business has contracted, so the valuations have gone down. Because the size of the business has contracted, the total outgo for Axis Bank is going to be less, which means that in the near term, it's an acquisition which has come at a discount to what the earlier price was, which means Axis Bank in the near term does not need to raise capital. So that's the good bit. The bad bit here is that the credit card business is becoming extremely competitive. My first credit card was Citibank. Looks like your first credit card was Citibank, but that may not be the choice for a lot of people now going forward. So can they really use the Axis Bank franchise to really take the Citibank credit card business forward? That is something which will be a work in process. It's a transition. So in the near term, no capital requirement, good positive, but the business is contracting and they will have to really put their shoulder to the wheel to scale it up. That is something which would be a real test, so to speak, for Axis Bank, because up until now, Axis Bank in a sense is trying to change its entire construct of the business. They've bought insurance, they've bought credit card, they're trying to do what, let's say, an HDFC Bank is doing, or what an ICICI Bank or an SBI is doing. So in the near term, I think this is going to be a positive for Axis Bank because you don't need to raise capital. That's always positive.
Okay, so that's Axis Bank, largely on the back of the Citi acquisition, understanding of the dynamics and what in the long term it means. But let's get a move on then and focus in on the auto sector. Nikunj, you touched upon it briefly earlier this morning, but now we're focusing particularly on the CVs. Given the kind of momentum that we've seen for the individual players, what's your outlook?
I think this is one space where the base effect clearly is not having an impact. And I'm looking at, see, this is the base effect, right? 2022 is because 2021 was the entire COVID adjustment. So this was a difficult year to call because of the base effect. Now this is a normal year, Avan. In a normal year, if the sector is growing at 20% plus and 20 has become 25 for the month of Feb, this is a good quarter for them. It just tells you that the economy is reviving. Why do you buy trucks? You buy CVs or commercial vehicles when you're confident of the freight business. The freight business is a function of the underlying bent of the economy. So the CV cycle is in definitely some kind of an uptrend. So while we can talk about this end of the economy slowing down, that end of the economy slowing down, this is not doing well, rural economy under pressure, but by and large the velocity of freight in India has moved. The direct freight corridor has not been as successful as what we thought, which means that the road transport, great roads, and more connectivity is something which is also adding to this entire theory. So I think if you're looking at one pocket within the auto space, which is like not a bright spot but a shining sun, I think it's CVs.
Okay, so it's CVs to watch out for, and we have seen that month-on-month growth play out in some of these players as well. But Anisha, there's lots more as well to talk about with our guests as well as our team.
Well, yes, and I would love to get the thoughts from Dipan as well as our technical experts on Axis as well as the auto stocks. But before that, let's get in a word from the management of Axis Bank as well. My colleague Ankur Mishra caught up with the management at Axis Bank on the sidelines of the press conference with the transition happening yesterday. Let's listen into what they had to tell us.
When you announced the deal, the total consideration was 12,325 crore. Now it is 11,600 crore. Total 625 crore to lesser, if we say it precisely. So what has been the reason of this number change, if you can explain first?
Yeah, I think the reduction is about 700 odd crores. See, when we had announced the deal, we had mentioned this, that from a in terms of making sure that the value preservation happens, because the moment you announce a transaction of this kind, there is expected to be some amount of customer attrition. And we were very clear that we should make sure that both parties are aligned in terms of running the business and protecting the customers as much as possible in terms of the franchise. There are 2-3 things that happened between then and now, right? One is we went through an express consent process, which is the right thing to do. We went and asked customers and we sought their consent to move. So there was some amount of attrition because some of the customers didn't want to consent. So that happened. There has also been, over the, like Amitabh mentioned, our original base of the deposits was on June 2021. If you remember June 2021, that was the second wave of pandemic, wave 2 of the COVID. We had some of the highest deposit bases at that point in time across the banking sector, largely because the spending was not there.
Dipan Mehta, let's address the news here. The Citibank acquisition is coming, I would say, at a discount to what the original acquisition announcement was. What do you think it means for Axis Bank?
See, I think that certainly it will add a couple of percentage points to their growth rates. And I think it's a very good deal from Axis Bank's perspective. There are great cross-selling opportunities as well over here because Citibank did not perhaps have all the products which Axis Bank has got. And Axis Bank also has a very good brand per se. And this kind of an acquisition will be incrementally positive. It's not going to be a complete game changer considering the size of Citibank, but nonetheless, I think at times like this, when competition is increasing in the banking sector, and there is a great demand to go after high-ticket, big-ticket customers, I think keeping that in mind, this acquisition is very positive for Axis Bank, and you will see the results flow through itself from the next quarter onwards. And I think on the whole, it will be earnings accretive. And Axis Bank per se also is available at attractive valuations and cleaned up their balance sheet, and on the whole growth rates are good. So positive on Axis Bank, more so after this acquisition.
Okay. So if somebody has a 2 to 3 year time frame, every bank now has a very different proposition. HDFC Bank, well, it's the merger. For Axis Bank, small acquisitions. For State Bank of India, pure solid corporate growth with a promise on ROA. What is the best combination for next 2 to 3 quarters or 3 to 5 quarters if somebody is looking for one big idea from the financials?
Yeah, disclosure over here, Nikunj. The first few minutes of the marathon I ran with Vaidyanathan of IDFC First Bank, and I was there with him at the start line as well. And I think that he's one CEO in the banking sector worth watching. Extremely focused, aggressive, and has got fantastic ideas where he wants to take the bank. If you look at the IDFC First Bank numbers last 2-3 quarters, they are best in class and on almost all financial parameters. They are amongst the number one or two within the space. Valuations are reasonable. They have kept their loan book pretty much clean, having written off a lot of the bad loans which came with IDFC, and there were a lot of unusual and a lot of setbacks over there, but the company has absorbed all of it. So I'm very positive on that bank. I think it will be an outlier and outperform when it comes to growth rates. So that's where we are placing a lot of our capital in. Again, I said as a disclosure that we've been invested in this company for a long time, so our views may be biased. Apart from that, I think HDFC and Kotak Bank also should report very good numbers and would have a sense of outperformance compared to ICICI and Axis, which I think is a bit of an over-ownership situation over there.
So you bought the stock after the marathon or before the marathon?
No, Nikunj, I had bought Vaidyanathan's Capital First, and that's how I got shares of IDFC First. And I thought that Capital First merger into IDFC Bank would be very positive. But in fact, we had a long sideways to corrective movement because IDFC Bank's loan book was not as good as it was estimated when the acquisition took place. And there were many bad loans which came out over there, big ticket corporate loans, infrastructure loans, which then had to be provided by the merged entity IDFC First. And it's only now that the balance sheet is completely cleaned up, and the way they have gone after CASA and the way they have grown the retail book, I think is very impressive.
When the acquisition happened, it was a pure, very low liability franchise, and I think Vaidyanathan has done a great job in turning it around, bringing the NPAs down, dealing with Vodafone, ADA, a group of companies. There were a lot of corporate loans which in a sense they had to struggle. But the real talking point, at least this week, is back to Adani group of names. And we were doing some analysis with Kunal yesterday as to what is the positioning of Adani group of stocks. These stocks are up from the 52-week low. Especially Adani Enterprises are 50%, but after you fall 50% and if you go 50%, you're still down 25%. Simple maths. Now, Kunal, let's look at the top three stocks: Adani Enterprises, Adani Ports, and ACC Ambuja. These are the three stocks where the market attention is high. They are part of FNO. On the charts, without any sentiment, without any yes or no, without any bias, on the charts for a trader, how are these three stocks looking now? What they were in Jan versus where they are now?
So on the charts, it would still be bearish for Adani Enterprise, Adani Ambuja Cements, ACC, etc. I think the only positive chart over here from the Adani group of stable is Adani Ports, which has gone through a revival as well as a very stable kind of an uptrend, breaking past about the 600 mark yesterday. Now, I'll share interesting data. Like for example, the last 2 days, Adani Enterprise has seen as you said, more than a 50% recovery from the I think 1100 mark for itself. Now, day before yesterday, when the first rise or the bounce happened for Adani Enterprise, the short covering was almost 20 lakh contracts for Adani Enterprise. Yesterday, the short covering was just 3 lakh contracts. So, which means that till the time, a stock generally rallies into a vicious kind of an upward trend when there is a huge amount of short covering which happens. But the extent of short covering reduces, which means that the pace of rally would halt significantly for the stock price. So, won't be surprised that Adani Enterprise maybe shows a mild bit of an uptick, but then it could probably get into the negative territory today as well.
Now let's understand that graphic. Adani Port was overbought in Jan, it is still overbought.
Yes.
Overbought stock should not be bought.
Yes.
Let's move to the second one. According to your analysis, in January Adani Enterprises were extremely overbought. It is an oversold bounce. Oversold bounce is always a dangerous thing to buy. So avoid Adani Enterprises.
Yes.
And correct me if I am interpreting it wrong. Ambuja Cement in the month of Jan was neutral. Now it's mildly oversold, which means a little bit of dinky bounce in Ambuja Cement can not be ruled out.
Correct.
Why is Nuresh not agreeing? Nuresh, I can see you, my friend, when we are doing analysis of Adani group of stocks. Sometimes when you're quiet, I know that you don't agree. Otherwise, you would have raised your voice by now.
So I don't look at the Adani group of stocks as a trade, and I've given up on analyzing them months and years back. The only stock, like I've said before, in the drop also, it was only Ambuja Cements and Adani Ports, which look interesting. Adani Ports has moved up a good 30-50% from the bottom. Ambuja Cement still has space. So Ambuja Cements is something which can eventually go towards the 400 to 480 mark. And say stock was 310 odd levels before the Adani takeover. Also, the prices in, say, the Russia-Ukraine crisis was around 280 to 310 zones. So at 330, that's the best trade you have in the Adani group as well as in the cement pack, because the whole premium is taken out. The rest of the names, it's very difficult to trade in Adani Enterprises when a stock goes, even in the recent term, from 1,000 to 2,200, back to 1,200, back to 1,500. Even if one analyzes, one cannot take a decent exposure as a trader, because there is a risk of a 10% move on the opposite side of your trade just out of nowhere. So no views on Adani, but Ambuja Cement still looks the most promising name.
Okay, he's given up on tracking some of those Adani group stocks. That's the outlook. But let's get in a view then, Nuresh, from you on the charts of some of these auto companies, just basis the kind of commentary that we've seen from most of them across the board. Escorts talking about pretty strong demand momentum. You have Bajaj Auto as well, where the export component has jumped quite smartly on a month-on-month basis. What are the chart readings like?
So Escorts is something which has already done really, really well over the last few years. Even in the near term, the stock has been holding on to 1950 over the last 6 to 8 months. The momentum has not been great. The stock was at 1900, 1950 almost a year and a half back. So Escorts and Mahindra have clearly shown that resilience in terms of corrections. Both the stocks don't correct much with the markets. For example, 1250, 1300, 1200, 1250 becomes a base for Mahindra and Mahindra. Escorts is 1950. But clearly it's the space of tractors which is really doing well. So even if you look at Ashok Leyland, which has underperformed from expectations, but the stock has just been around that 140 mark for the last many months. It has not been able to break out, but there is relative resilience. Bajaj Auto tried to make a move, went up to 3600, from 3600 to almost 3950. Is back towards that lower end of the range. almost retested 3600 mark, could make a slow recovery. But the trends are very clear. The space like Escorts, Mahindra and Mahindra, Ashok Leyland remain to be leaders in two-wheelers. It is TVS Motors, which continues to show the best charts. In four-wheelers, it's pretty muted across the board. But Tata Motors is something which we watch out for purely for the fact that 1.5 years has gone in consolidation.
Okay, so autos in the fast lane, but what's also been chugging along is some of these rail companies, and today as well, some of these automotive players will be in focus with respect to locomotive players, I beg your pardon, will be in focus because the Vande Bharat order for 200 trains seems to have opened. The total value of the order was around 60,000 odd crores, and the lowest bidders have been chosen to be RVNL, BHEL, and some other consortiums as well. Kunal, your take as well as that entire rail capex theme is concerned. Is there any stock that you would recommend as a buy?
Well, not as of now. I think the only stock from the railways pack as such which looks attractive is Titagarh Wagoner stock, which we've been bullish on earlier. I think at 157.60 approximately. That's a stock which has now moved above those 200 plus category for itself. So that's the stock which has looked very attractive and more stable as compared to the other pack. Texmaco Rail as well has gone to a correction, but the stock has not been able to surpass the previous life highs. Talking of the railway, capex stocks, the likes of Ircon, etc., these stocks have gone through a very sharp correction. So in the last 3 or 4 months, there has been a tapering off of risk which has happened, or these high beta stocks which has happened from their December end highs or January highs, as the case may be. And that's where the difficulty is, that which are the set of stocks which would rise the first and bottom out first. As of now, I would not venture out into buying these high beta stocks in the market, which is still trying to get its feet back again. So it's better to avoid the trade. The only stock from the entire railway pack as such which has been looking attractive is Titagarh Wagoner.
All right, let's just get in a view then, Dipan, from you as to what the outlook is. Dipan is Dipan with us, yeah. So
Yes,
Dipan,
I'm there. I'm there.
So I just wanted to understand from you as well what the outlook is when it comes to the entire hospitality theme, the fact that we have seen a rebound with quite a bit of vengeance, and the kind of commentary as well, the kind of expansion plans that we've seen from a lot of these companies are in full throttle. If you had to zero in on picks within hospitality, what would that be?
Yeah, I think that recently I was there at a presentation made by Puneet Chatwal of Indian Hotels, and I was completely blown away by the presentation. I think the top management had set certain targets 3 years ago, and they have achieved beyond those targets at this point of time. Clearly, Indian Hotels is a company which is on the move over here. They are focusing on capital allocation. They want to improve the return on equity, and they want to consistently improve their operating profit margins as well. And I think at this point of time, the kind of environment which they are operating in also is very, very positive. You don't get any more discounts from any of these hotels. The rooms occupancy levels are at very high levels, and the average revenue per room also is sharply increasing, more like double-digit growth rates for these companies. And mind you, Indian Hotel also is expanding capacity rapidly. The best part is focusing more on India and has set up multiple brands within the hospitality industry. So I would be extremely positive on Indian Hotels. Having said that, disclosure, we and our clients are invested, and this is perhaps the best company to buy in the hospitality space. Another company which comes to mind, of course, is Mahindra Holidays, which also has been a quiet performer and a very differentiated business model, which has not yet been completely discounted by the market. So apart from these two companies, there are smaller players as well. But I think when we are seeing these kind of conditions in the hospitality industry, it's best to go with the market leader.
Okay. It's absolutely amazing. I look at the economy. There is the rural end of the economy which is suffering. There is this middle layer which is now feeling the heat of layoffs or what is happening to the job market. And then there is the luxury and the aspirational end of the market which is just bloating. Whether it is luxury cars, luxury watches, luxury hotels, luxury travel, luxury apartments. The word luxury is now the most sought after word in terms of where the demand contours really seems to be moving. Look at Ethos. I mean, this is a company which is a branded watch retailer. Almost 1,000 rupees for Ethos. 52-week, 24% higher. Vedant Fashions, they own the brand Manyavar, 38% higher. Now let's look at the other ones, which is the middle layer. The middle layer in a sense is represented, let's say, by ABFRL. Stock's not done anything. Trent, that's an outlier, but Trent also has done pretty okay. DMart, another value retailer. You would say inflation ke zamane mein value will do well, value retailing will do well. But DMart, in a sense, is now feeling the heat of perhaps pricing. Dipan, VMart, DMart, when there is inflation, value retail should do well. But what do we have? Ulta.
I think, Nikunj, this is a very nice short presentation which you made. I think clearly opening up my eyes that the luxury part of the entire consumption has stood up, has sustained very well, and is growing at high double-digit growth rates. And that's where investors need to focus on. Specifically coming to DMart, I think it's feeling the pressure of online players over there who are prepared to burn capital to get market share, and DMart's philosophy is slightly different. So that's the reason why perhaps they are lagging in that particular segment. And when it comes to VMart, I think they are feeling the full pinch of the slowdown in the rural spending. But nonetheless, I think it's a good company, and when you see rural spending come back up, then I think VMart should do pretty well as well. But clearly, the focus has to be on companies which are offering luxury products, luxury services, and you may have a long road in terms of runway for growth for these companies, but you need to be a bit patient as well, because the spends over here also can be slightly volatile.
All right. Thanks very much, Dipan, for shedding light on all of those sectors and stocks that you're bullish on, as well as just giving us a general view on the markets.